Welcome back to the Retire Young radio show. I am your host, Joshua David, having a good time jamming to 2021 with my good friend and my great pal, Mr. Al Connickson. Also, don't forget to subscribe to the Retire Young podcast on Apple Podcast, iHeartRadio, and Spotify. Al, as we get into this next topic, it's one of those topics that we talk about every week, and we're getting more and more people understand and want to take more action in their retirement accounts. Because here's one of the biggest problems is people just don't have enough to retire. There's a lot of people listening that have some retirement accounts and some balances in there, but they're not performing how they want to. They're not tracking the market. But the biggest question that they have is, I don't really know what's going on with my retirement. Mm-hmm. So people can't retire with confidence because they just don't know. How are you helping people become more confident retiring?
Well, I think this is the problem, Josh. People feel that the only choice they have is to put together a 401k. It used to be years ago, maybe for our parents or grandparents, they could rely on a pension. That was a guaranteed amount of money that came in every month. They had that pension and Social Security and maybe some investment. So there was kind of a three-legged stool. Now, for most people, pensions are gone, or if they're still around, they're probably so underfunded that there's an issue there. But for most people, you rely on two things, or maybe one of two things. Social Security is one, and your retirement savings is another.
Was that a joke about Social Security?
It is a joke. Social Security is. But that's what, unfortunately, probably 50% or more of the single people in this country, that is their primary source of income. At least there's something there. But for most people, the only thing you really have control over is your retirement savings. Most people assume that what they have, the only thing they really have access to for that is a 401k or 403b, some kind of an employer-sponsored retirement plan. And those are structured by a sponsor, could be one of the big brokerage firms that will come in with a handful of mutual funds or maybe some exchange-traded funds. Put them on a table and say, okay, here, you choose which one you want to invest in, and then you make any of the changes that need to be made over the course of maybe your 20, 30, 40 years of working. Well, and then they're charging you a fee. It's sort of like putting your money in a storage facility. You decide what to do with it, but you're paying an amount of money just to have it there. Fees are a huge draw down on what you could have when you retire. But most people just assume that's all I have. And that's got to be a mutual fund or some kind of a structured product. And they don't know how to manage it. They don't know how to get the greatest benefit out of it. So one of the things that we do is talk about that, how to properly, we call it dynamic 401k management. Maybe there's some things you can do to get better returns out of your 401ks, even just managing. I mean, typically there is what we would call a safe haven product that you have access to. So maybe in a bull market, there's a couple of things you have access to that might be beneficial. Maybe when we go through a bear market, maybe that safe haven would be a place to go. So you can trade within your 401k, but you have to know how to make the changes. When do you make the changes? That's where our core strategy comes in, because you can use that strategy to identify on a price chart. And by the way, that's the primary thing we do is teach you how to read a price chart. That's where you're going to be able to identify the turning points in prices and how far it's going to go. And you have access outside of a 401k and a self-directed IRA to many more choices. You can trade the futures market, the foreign exchange market, the options market. There are strategies you can use in an up market, in a down market, in a sideways market. Plus, you have the opportunity to protect your assets. You could actually have what we would consider an insurance policy on your portfolio. How great would that be, where you don't really have to worry that much about a downturn because you have protection in place?
Yeah, I mean, I'm really glad you brought up, you're really talking about self-directing, and a lot of people just are afraid to start looking into it because they don't know how to do it.
Sure.
Well, that's where education comes into play. You have to learn how to do it. I mean, it's not something that you're just going to go out and just poof, magically learn. You got to find somewhere to learn it. And if you're able to potentially lower the fees on your retirement accounts, how do you think that could impact you? Would that give you more confidence going into retirement, knowing that you're paying less fees? Now, I mentioned in the last segment, I have, in my opinion, for longer term traders, that want to be able to just be in positions a little bit longer, not short term like daily or even weekly sometimes. I think it's the best market, the slowest market for people to participate in. Now think about that. If you had a market that was slow, that would be more comfortable to get into. The stock market is crazy these days, which is good. You want that,
right?
But what is that slow moving market that trends well, that has opportunities any time of day? Let's hear it.
Well, we're talking about the foreign exchange market, commonly referred to as the Forex market. Trades 24 hours a day, as Josh mentioned. Has great leverage. Look at maybe 50 to 1. Why is leverage important? We talk about leverage. The institutions understand the value that basically what it's doing is it's maximizing the value of every investment dollar you have. For us as investors, it lowers the financial barrier to entry, and it basically kind of acts as like a down payment on something. It allows people to participate in a larger investment with a smaller upfront out-of-pocket or in dollar investment. It's like a mortgage on a house. You put a down payment on a house, you control an asset that might be $300,000-$400,000 house for maybe $20,000 or $30,000. That's kind of what leverage is in the markets too. It's maximizing the value of the dollars you have. 50 to 1 leverage, it's pretty substantial.
Phenomenal.
It's phenomenal.
Well, it's a great opportunity because it really does allow more people to participate than the stock market.
Well, absolutely. And when you're in retirement, if you've worked 30 or 40 years, you have a whatever the amount of money you have in your retirement account. A lot of people are really reluctant to take big portions of that and invest it in something. Well, the leverage assets like Forex will allow you to take a smaller portion of it and still participate in a larger investment.
So you can keep some of your money in cash then. Is that a possibility?
You can keep it in cash or some kind of a fixed income. There's a number of different things you can do. And by the way, everybody is going to be a little different as to how they should do this and what they need, what their goals are, their expectations. So everything should be really customized to you individually, and that's what we do with the plan that you have. But the foreign exchange market, as Josh mentioned, it can be a slow moving market, so you can use it long term for your retirement accounts. You can use it actually with a shorter term time frame chart, maybe for some swing trades we would call it, a shorter term. But it gives you some great versatility there, and it's the most liquid market in the world. It trades $5 trillion a day, more than all the stock markets combined.
That's crazy.
That liquidity is there. The reason that's important is that when you want to enter something or exit, you want to be able to do it right away to get in at a good price. You want to make sure there's always somebody there to take the opposite side of your trade. With $5 trillion trading a day, that's never a problem.
Well, think about this, too. A lot of people want to participate, and they want to be involved with the biggest, the baddest, the best things out there, right? Forex market, in my opinion, is that because it is the biggest.
It's global. It allows you to participate in a global way.
Yeah, that really it facilitates international trade and investment. That has to be open 24 hours a day, right? But it allows you to utilize that leverage. Such a great market. So if you want to learn more about the Forex market, learn more about how to potentially use that in your retirement accounts. There's opportunities that are there. But also, if you want to learn how to start that plan for your retirement, how to plan for what type of investments that you need to be in, how to be properly diversified in multiple assets like the Forex market, or even some options, as Al was getting into earlier when he was talking about different techniques that you may be able to potentially insure your portfolio. Al, coming up next, I want to continue this discussion on self-directing because we haven't really covered that all yet.
Sure.
But I also want to talk about opportunities that people have in multiple markets any time of day. I want to continue that as well. This is Josh and Al. We will be right back.